Hi, I'm James Kirby, Wealth Editor of the Australian newspaper, and today I'm talking to Stirling Larkin. Stirling regularly writes for the Australian, Weekend Australian, and he talks about high net worth, global high net worth investors, and the lessons we can learn, all investors can learn from them. Hi Stirling.
Hi James, how are you going?
Well, tell me, late 2014, when we look at that group in Australia, tell me, what's your definition of a high net worth?
Yeah, sure. So in Australia we have retail investors and wholesale investors. It's a quite clear definition between the two. But basically when we talk about ultra high net worth investors, we're talking about individual investors who have 25 million in what's called fungible assets. So assets they can directly invest into different asset allocations. 25
million, a lot of money. It would, you know, in absolute terms, how many people in Australia would have that?
We're talking 3,500 to 4,000, about that much.
Okay, so a few thousand people.
A few thousand.
But these are among your clients. But what many readers and viewers would like to know is, what can we learn from these people? What do they know that we don't know?
Sure.
I mean, if I was one of your clients, one of your $25 million clients, and I burst into your office and I said, Stirling, I have got 5 minutes. What are the three things you've got to tell me this year? What would you say?
Well, the good thing is we have some very clear signposts what 2015 is going to look like. And there's no doubt it's going to be a much faster year, very similar to what we all saw in 2013. And 2013 caught many of us off guard. What we learned from 2014 is that in 2012 it was a relatively slow year, it picked up very quickly in 2013. 2014 is very similar to 2012, but we know that we should see a very, very fast market internationally in 2015.
So you expect a lively first quarter next year. This is equities we're talking about?
Equities and basically any of the risk adjusted investments. So we're not talking corporate, we're not talking bond markets, we're talking basically anything, you know, on the more faster end of the asset allocation.
So like number one, you're saying that the first quarter US S&P 500, that market could be lively, could be good.
Exactly, and we're expecting that to obviously trickle down and follow here in Australia. Okay. But we're still in November, and it's still giving us enough time to get ready for that fast tempo.
What else? What other two things would you tell me? As I have my chauffeur waiting.
Yes, definitely. Well, again, just like a plane changing altitude, we know that we're going to a new level next year, and there will be some bumps. But that volatility can be a very good thing for portfolios, as we've talked about the paper many times over the last few weeks. Alternative investments are coming back in the fore. There's a new category that's very popular in Asia called liquid alternatives, which definitely has a place. And in Asia, it's actually seen as both a retail and an institutional or wholesale option, which is quite interesting.
Just to simplify, is this hedge funds mostly?
Yes, sorry. So liquid alternatives basically fall very, very closely to hedge funds, but they provide better liquidity. And liquidity would be a key for 2015.
Okay. And what would be the third and final thing you'd tell me?
Sure. So equity markets, particularly in the US, have a way to go. There are certain specific subcategories in Europe and in Asia that we could still look at, but we have to be very careful, again, on the macro picture. It's pretty clear that certain parts of the world are going to move very aggressively. The US, for example, and Japan, but you need to obviously be very careful of emerging markets and what's happening in Europe. Everyone knows this already, but to take a strong view now is very important before we head into first quarter of 2015.
Stirling Larkin, thanks very much for talking to the Wealth section of the Australian on Video.
Thanks, James.
Thank you.